Be cynical about this. Any lasting damage?
Well, there's certainly a cost as far as the government shutdown is concerned. The period that we've just been seen is going to have cost the US economy rather somewhere between a sort of $22–26 billion. So there is a fiscal implication there, but I think it's more psychological as far as the markets are concerned. President Obama's words there about lifting the cloud of uncertainty and fear over the market seems pretty misplaced, quite frankly. It's maybe just shifting it slightly down the road. It isn't lifting it at all. We're fully aware that the sort of deadlines we're talking about, budgetary speaking, we're back again December the 13th for the US, and it will be February the 7th as far as the debt ceiling is concerned.
But this amazing, this massive lack of predictability, how do you play that as an investor? I see the European markets have opened higher, I guess, in relief as well, but how do you play it?
Yeah, I guess we've almost forgotten the fact that we're halfway through the US reporting season at the moment, and there's been a raft of US corporates come out with figures, and I suspect that the vast majority of traders out there have been organising their risk portfolios rather than necessarily focusing on the sort of day-to-day earnings, profitability, etc. of companies. So it's a bit difficult. You do feel that it'll ensure that we don't get over-enthusiastic about the markets, that's for sure, which is maybe no bad thing, as equity markets have really benefited. I guess it puts a question mark on overall the whole tapering, chances of tapering as far as quantitative easing is concerned, and that fundamentally will be a positive for the equity markets as well.
How do you feel about the US reporting season so far?
Yeah, a bit of a mixed bag. We've had some good figures out, obviously, but they haven't really beaten the expectations as they've managed to do in previous quarters. You do feel that institutional analysts have rather raised the bar a little bit to ensure that we don't see some of those outrageous beatings of expectations. And looking through some of the figures, Citigroup a little bit worse, Charles Schwab, Bank of New York Mellon, Bank of America, all better. IBM and eBay both had good earnings per share figures, but if you drill down the figures a little bit, Q4 was looking a little bit ropey. IBM lowering their forecast, and I think that may well be something that we see a little bit more of fourth quarter figures for some of these companies, with the deadlines just being just past the sort of year end, the beginning of 2014. You could have seen quite a lot of these corporates figures being affected by that. A
couple of numbers to watch. US unemployment claims. I guess with the lack of non-farm payrolls, these take on a little bit more relevance now.
They do. They're watched that much more closely because we didn't have non-farm payrolls. There is speculation we might see the non-farm payroll figures come out around about the 25th next week sometime. So that's yet to be confirmed, I think. But up until that point in time, and I guess the relevance of the non-farms when they're coming out at the end of the month rather than the first week in the month does come into question. So yes, unemployment claims will be looked at a little bit more closely. Over in the UK, we've got retail sales figures, monthly retail sales figures coming out as well this morning in an hour and a half time or so, 9:30. So we'll be watching those too.